Today we're going to be talking about how the Fed lowered rates, but mortgage rates went up. So a lot of people are confused about this, so I'm going to walk you through what I'm seeing on my end as a mortgage lender. Now, the first thing to know is that the Fed cuts do not directly impact mortgages, and mortgage lenders aren't waiting for the Fed in order to address rates. So for instance, if you look at last year versus all the way around to that beautiful September 17th date where we saw rates at the lowest that they've been in the last 2 years, you'll see that rates were progressively coming down in the mortgage market. The Fed had not done any cuts. Okay, so what happened is you had all this hype about this Fed meeting, and you have, we're going to call them the powers that be in mortgage world. Their job is to forecast what the economy is doing, what the Fed's going to do, how the market's going to react, and how that's going to affect mortgages. It's not like there's one indicator that addresses how mortgage rates are put together. There's a lot that these people are looking at in order to forecast. And with rates, generally you're going to see what they think is going to happen before it happens. Because when we're talking about locking money, we're talking about locking it for 30, 60, 90, 120 days. So they're not just looking at today, they're looking at the future. So here's what happened. The powers that be overall were expecting a 1/4 to a 0.375 cut from the Fed. Based on all of the rhetoric that they had heard that year, based on the revision of the jobs report, they thought it was enough to nudge the Fed into doing a cut, but they didn't expect anything dramatic, right? To go from 0 to a half, it's a bit dramatic. It's that simple. And when that happened, you know, the initial thing you think as a mortgage loan officer is you go, oh, it's bigger than we thought. Rates are going to get lower. No, because here's the thing. They weren't just forecasting that cut. They were forecasting when they're putting together rates, what's going to happen at the next meeting, the following meeting, the following meeting. Well, when the first cut was bigger than expected, it kind of made everyone go, what do we not know? Right? Because here's the thing, the revision of that job report definitely made some people feel like, what do we not know? What else could change? Why are they doing such a dramatic cut? Are we on our path to a hideous recession? You know, as mortgage companies, like, it's just an So you saw rates go up a little bit there, right? And then it's like, okay, well, let's wait for data. Let's wait for data. Let's see why they did this half instead of what everyone was expecting based on all of the economic indicators that they analyzed. And that's the thing, like there's literally people at every single mortgage company, bank, credit union, you name it, incredibly, talented people who this is all they do is analyze markets and, put together what the correct number is. And they were thrown. So waiting for more economic data to figure out why it was a bigger cut. Then we get this great jobs report, right? The job report came in so strong. It came in with 100,000 more jobs than what was expected. So rates went up because rates are like, well, wait a second. The economy must be doing better than we thought. So rates go up because they're like, maybe the Fed is not going to do more cuts. They've already revised the projections down to theoretically at the next meeting, the Fed does a 1/4 and then another 1/4 by the end of the year, because that's what the Fed had indicated at the last meeting. But the last meeting was before this beautiful job report. So here's the deal. You're like, when's the next meeting, Jen? November 7th and 8th. Yeah, so look, guys, we've got a couple things going on here in rate land. Do I expect volatility until the election? Yeah, I expect volatility throughout the end of the year. And I'm going to tell you why. Number one, do I think I'm going to see a big rate dip before the election? No, I don't think there's any economic data that could come out that's going to convince anyone that we should be dropping rates dramatically until we at least know the outcome of that election. And the reason I say that is because both candidates have policies which could be inflationary. Based on who gets elected, the Fed could be analyzing those policies to see how that's going to affect inflation. And if you've been watching the market, you know inflation is the key we're all watching. So I think we'll see a little bit of volatility. I don't think we're going to see any big drops. I don't see anything that would drive us into thinking that rates are going to progressively go down, a good amount through the end of the year. So right now, I think we're going to kind of stay in this higher than September 17th realm. How high is it? Guys, seriously, it's like August again, okay? We're just back in August when it comes to rates. We had a really pretty 2-week September window, and I'm going to say this right now. I reached out to over 200 of my clients in that window, and I said, now's the time, now's the time, now's the time. And did I know all this was going to happen? No. But what I knew is the rates were so darn good, I didn't want to play with it. And I wanted to make sure that they were able to take money off the table and refinance now, and look, if it all went down later, great, but I wasn't going to lose that opportunity. I think about 130 locked in. And I am so glad because rates are about 0.5% higher now. So my advice to you is if your lender's reaching out and saying, seriously, because I don't reach out a lot, right? I'm not going to harass you. I've got stuff to do. You have a life. But if it's me, seriously, take it serious. Anyways, but look, I think we're going to see volatility. I don't think we're going to see a big dip like that. I think the best chance at another big dip is going to be after the election and the Fed meeting. We've got to see what happens there. And we have to see with the Fed how they're reacting after that election. Do I think they would do a 0.5 point cut? No. Do I think they might do no cut? Yes. Maybe a quarter, maybe. So we'll see. And look, if you're like, well, Jen, where do you think rates are going to end in 2025? Because a lot of people are asking that question, and there's a lot of mortgage lenders saying, oh, they're going to be lower, they're going to be this, they're going to be that. Let's get real, okay? Until we know who the next president of the United States is going to be, we cannot clearly make that statement. Because I think you're going to see two very different outcomes depending on who's elected, what happens with rate. And it's going to be tied to market sentiment. Do people feel like we're going to be having a roaring economy, or do people feel like we're going to be going into a recession? That's number one. Number two, the data. We need to see some consistent data and trends before anyone knows which way this market's going to go. Because look, you had that dismal report, that revision in August. Very dramatic, guys. Very dramatic, not normal. And then you had an incredibly strong jobs report. The math isn't mathing. So until we can see consistent trends, until we know who's going to be running the United States next year, I think that it's a coin toss. So take your coin, flip it. If you are looking at buying a house, guys, look, you need to be comfortable with the rates and the payments now. If you're not comfortable with the rates and the payments now, do not buy a house or buy a less expensive house. If you're hoping that rates are going to go down 0.5% in a week or two, could they? Maybe. Do I think it's likely? No. So be comfortable with where the rates are now. Okay? Very important. If you're thinking of refinancing, look, talk to a lender, reach out to us. Let's look at the math, because even though rates were lower, September 17th, that week of, it doesn't mean there's not still an opportunity for you. It's going to depend on where you're locked right now. Okay, so really important to know. That's my overview. Look, this is my personal opinion. So what do you guys think? Do you think rates are going to go down? Do you think they're going to go up? What do you think about all these job reports? Where do you think the economy is going? Do you think we're heading to a recession, or do you think our economy is strong? Weigh in.